Hey, you see this? Canada bans crypto leverage and margin trading after the FTX collapse.
Did you tell Chris yet? We should talk to Chris.
No, we need to talk to Chris.
Chris, it looks like Canada's banning leverage.
Save those passwords.
We got problems. Canada is going to prohibit crypto firms from trading leverage and margin in Canada. That's a big deal. We got clients.
It's recording.
We should tell Ian right away.
Let's
go. Let's go.
We can get that for free. We don't. Authentication is like super different from delegation.
What's going on? What's going on? We're in a security meeting.
Sorry to barge in. We got a problem.
I can't believe this keeps happening. We got to figure out a way to do this. We should probably move the boxes around, right?
Yeah, we should go to Tokyo with him.
Yeah. All right. Well, will you guys figure that out, and then we'll come up with a plan. All right.
So it's really important to point out that we are not describing the notion of moving servers to try to avoid Canadian jurisdiction. What we are talking about is for our multinational companies to ensure that servers are positioned in places that are most appropriate. To the extent that Canada does not want to have anything going on with derivatives, we want to make sure none of our Canadian servers, because we use them all around the world, are doing derivatives on behalf of clients that might be based in the Cayman Islands or based, frankly, in Europe. It doesn't really matter. Our server applications just need to be configured that way. This is not about avoidance, it's about optimization.
Yet there are so few projects. How is it that an average crypto customer is going to go around and differentiate and parse out the difference between some of these scams and real life projects that have actual utility?
So I think that's a good question, and I think what you have to realize is that just because of price action, you could see something drop from $15 to $1, and that doesn't mean necessarily that's a scam.
Sure.
What it does mean, though, is that the market was severely overvalued, and I think we see that unanimously with every crypto bull run, where you have projects like Near, Solana, and these other coins where the network's amazing, especially compared to Bitcoin transactionally. They execute on the blocks faster, you can transfer them quicker, but these projects just got completely overvalued so quickly. And I think it's important to pay attention to, in any downturn, the projects that stick around. And I would say for investors, at least at this point, stick to just purchasing Ethereum, Bitcoin, tried and true projects that aren't going anywhere, the true back ends to the market. And once you start to see those tides turning, then you look for opportunity on those smaller cap coins.
Okay, so say I'm an investor, or how about this? Say I'm not an investor. Where do I see utility in cryptocurrency, and why does it matter to me? If I just don't even want to invest, but if I just want to understand what's going on, how do you explain that to someone?
So I think you have to look at the space and look at during the bad times, just look at the teams, who's behind the teams, who's actually building, and then the real life application of what these projects can really bring to help make business more efficient, faster, and just more transparent. So then you could kind of see, where a scam might be or what an actual valid project can be.
Sure.
So that brings me to a different question: is what are the kind of red flags you guys see in these projects when it comes to scams, longevity, and overall success? What are the green and red flags that you guys see and kind of take note to?
I mean, I could touch on that first, and then we could pass it around. But I think once you start seeing a lot of these big market celebrity endorsements, that kind of just means to me that they're just looking to get something out in the public and build public trust by just putting hot names behind a project instead of actual building on it and then what it can do in the real world.
Right. I mean, we saw that with FTX, Matt Damon, Tom Brady, Giselle. All of them had $600 million.
Yeah,
or something.
Steph Curry, the Warriors.
Yeah, they're all endorsing FTX, and then here we are, a few months later, and absolutely nothing to show for it except for billions of dollars in lost funds.
And I think the biggest thing about that too is, the most interesting thing is, FTX to all of us was one of the most trustable exchanges, right? Everyone thought that was the safest place to keep your money in crypto. You heard all the Coinbase rumors about them being insolvent before you heard any of this FTX news break. And I think it's really hard to identify these red flags because they're so different from every project. I mean, if we look at Luna, that was an algorithm that took down and depegged their stable coin. But that type of information is going to be very hard for an investor to know going into it. You have these quant shops breaking this down, but that's not public information. And a normal crypto investor, retail trader, isn't going to be able to pick up on those red flags. So I think what it means is crypto investors are just going to have to watch their personal actions. I think it's going to move a lot of money to DeFi, where people are going to be holding custody of their funds, not trusting centralized exchanges. And I think it's just going to bring a new era of risk management to the industry. And seeing that, I mean, this hasn't just been happening this year. Every crypto cycle has had these type of projects that pump and dump, investors get wiped out, lose everything. And I think it's finally time, especially with the FTX thing, that people start to catch on and start to take risk management actions that are going to allow them to have longevity in this industry.
That seems to be kind of the cycle every year. In 2017, there was all the ICOs, right? And then, obviously this last bull run, there was the NFTs and how that could affect the market, and people got all infatuated with, buying a JPEG. But I think there's going to be some real life use cases for NFTs and in smart contracts, which could be in the real world as, in real estate, you can now pass a house deed from peer to peer or prove that something was insured. That could be all on the blockchain and transparent. You could bring that to, sensitive medical records and passing things between doctors or with their patients. And then I think another big one is going to be, the artists and musicians,
Right.
where they can now avoid the record labels and go direct to their fans and their customers.
Right, and just to that point, one of the most disheartening things about FTX blowing up is that people, artists and very talented musicians, for example, who are just sick and tired of big record labels taking over. And well, not over, I guess it's more just taking advantage of them, and this gives young aspiring artists and musicians and anyone who wants to reserve their credit. It gives them credit, and it gives a proof of their credit, and they can be rewarded for that.
Yeah, they get the ball in their hands and control their own destiny.
I think one of the most important things to recognize right now is we've been talking a lot about price action, in my opinion, coins rising and falling, right? And I think it's really important for the reasons you guys mentioned previously, is to separate the actual technology behind the cyclical nature of the market.
Mm-hmm.
So the blockchain technology, there's going to be a place for NFTs with luxury goods, with titles, with deeds, all of that. And I think it's important to recognize these markets move like normal financial markets. And looking around, there's a lot of turmoil in the world right now.
Yeah.
The stock market's been down, the war in Ukraine, there's all these outside factors affecting the market right now.
Mm.
And you have to recognize that this is going to move like a normal financial market, but that doesn't necessarily mean that the technology doesn't have a place in the future.
Yeah, and I think as it develops too, that volatility will get taken away a little bit, and you'll see it act a little bit more stable. And the projects that are building right now are going to be sound projects that you hear of, in the future.
And look, I don't think it's that different than any other industry. I mean, look at the dot-com era, right? How many of these companies had multi-million-dollar valuations that went completely broke right after?
Right.
It's the same with every industry where you get all this hype and all this momentum behind it. There's going to be all this stuff popping out of nowhere, and everything's going to be overvalued. But it's only until these black swan market events happen that really weed out the weak from the strong. And I think overall, this is just going to make our industry better. I've never been more bullish on crypto. And I just don't think that one individual is going to be able to dethrone a technology that I find is going to be crucial moving forward in the future.
And just to that point, one of the things I find so refreshing is how less drastic this downturn has been.
Yeah.
If you look in history, like the percent that Bitcoin has fallen in the previous bear markets, it's nothing compared to what it is right now. And so that gives me some hope for the future. The weak hands have gone, like Dave was saying, and people who truly believe and aren't just going to sell when times get tough are sticking around now. And I think that's gives me a lot of hope for the future of our industry.
And one thing I've always loved about this industry is the way it's progressing. You're going to see less and less of these events because it's moving out of hands of individuals and moving to the decentralized environment it's truly meant to function in. I mean, you've seen that with DYDX, these decentralized exchanges getting a lot more volume. You don't need to hold custody in some foreign entity that you don't know, You don't know their balance sheet.
Right.
They don't abide by U.S. law code. So it's up to personal investors to take custody of their assets, move smartly, and use the network overall.